Happy Friday, Brian Manning here. Let's get right to it. Just got to give you another weekly update. So let's see. So, a lot of talk on Monday about the jobs report that came out last week. So first week of every month, we get jobs reports. So last Friday, we got the Bureau of Labor Statistics, the BLS jobs report, which was a crusher, totally different than what the expectations were. But when you really dig into it, there's a lot of questions now about the validity and the accuracy of that report. And really, could some of the data that was there really have been a mistake? So I'll give you a couple examples. So first, the jobs report is done from a sample week. So they look at 1 week in the prior month. So they looked at the week in the middle of May, and they extrapolate the data from that 1 week, and that's what they use to average out and model what the entire month would look like. So in the business survey, we had reached out to businesses, and when businesses were asked about employment, many businesses looked at how many people would come back to work when they reopened. So for example, if you had a business and your business had 100 employees and you were going to reopen your business based on what your local municipality allowed on May 29th, and you got the business survey, a lot of companies would have said under this example, hey, on May 29th, we have 100 people coming back to work. Well, maybe that's not the case. Maybe of the people that would come back to work, possibly some of them aren't going to come back to work because they're earning more money on unemployment. And perhaps also some people are not going to come back to work because maybe at that point in time you realize, hey, I just don't need 100 people right now. I only need 50 people. So the business survey was very misleading. Then we have the household survey. Well, in the household survey, there was a misclassification of data. In the household surveys, when they call 60 to 70,000 households across the U.S., and people that were said they were waiting to go back to work were actually classified as being employed. So you had a business survey that was a little bit misleading, a misclassification of data on the household survey. So, we'll have to see what the employment report looks like again, but perhaps it just wasn't really accurate information. Shocking, right? Wednesday this week, we get MBA reports that we do every Wednesday. So Mortgage Bankers Association looking at loan applications and purchase mortgage applications are up 13% on a year-over-year basis. This is 8 weeks straight of purchase applications being up, which is really good to see. Also, Wednesday this week, we got CPI. That's the Consumer Price Index, usually something we pay very close attention to, which is a gauge of inflation here in the United States. You have a core number and you have a headline number. Well, both numbers were down. The headline number was down significantly because it does include oil in there, and oil has been down greatly, and the core number is down as well. So usually something we pay a lot of close attention to, not as much right now because we all know not as much spending has taken place, and we all know inflation is very low. And then we have Jerome Powell, probably a lot of the news of the week. Federal Reserve wrapping up a meeting, Jerome Powell speaking, probably just stating the obvious. I really have no idea what the hell's been going on in the stock markets. It seems crazy considering the economy that we have, and stocks keep going up and up and up. And Jerome Powell really, kind of setting a negative tone on that. So they are going to continue their bond buying spree. So what that means is right now they're still buying about $4.5 billion a day of mortgage-backed securities. So they are very much contributing to keeping mortgage rates low. And they also said that they just have no thought in sight of when they will ever raise rates in the future. So the Federal Reserve votes, and you get what's called a dot plot. So a dot plot doesn't tell us who the voting members were by name, but we get to see who all the voting members were and what their anticipation is for interest rates. And usually they're all over the place. It's very it's not unanimous. Well, this is the first time we've ever seen unanimous report on this. So dot plot shows Federal Reserve keeping rates at zero for the rest of this year. Dot plot shows Federal Reserve probably keeping rates at zero for all of next year. Dot plot shows Federal Reserve may be hiking rates very little bit into the year of 2022. So Federal Reserve certainly looking at keeping rates very low for a very long time. And then Thursday we get initial jobless claims. So and this happens every week. So initial jobless claims had 1.5 million new filings of people looking for new unemployment claims. Prior to this entire pandemic, we were seeing 100, 200, 300,000 people filing for unemployment claims. And now we get a report of 1.5 million, and it's kind of looked at as, wow, that's a good report because it's down from the prior weeks. Continuing claims were down by 300,000 people. So continuing claims are people that filed unemployment and filing unemployment again for a second week or longer, and those are down by 300,000. One thing to know is that these unemployment claims and this data lags by 2 weeks, so we kind of keep a close eye on it to see what's going to happen from there. Overall, Unfortunately, there's still a tremendous amount of people that are unemployed. Really perhaps stocks have just gotten ahead of themselves, because if you look what's happening in the stock market now after paying attention to what's going on and after seeing what Jerome Powell says, certainly they've come back to earth, which really for me just makes more sense. I'm always around. If you have any questions, give me a call. I'd love to help you any way I can. Hope you're having a great day. I'll talk with you soon.